Welcome back, investors, to Ticker Time News. I'm Adam, and mounting speculation that cybersecurity company Mandiant, ticker symbol MNDT, would soon be acquired finally reached its conclusion, but not by the company that many people had expected. In a wicked turn of events that no one saw coming, Microsoft walked away from making a deal to purchase Mandiant, leaving the door wide open for Alphabet to swoop in and acquire the company for $23 a share in cash, or a total of $5.4 billion. After Bloomberg reported on February the 8th that Microsoft was considering making a bid, shares of Mandiant rocketed higher, gaining nearly 50%. So most of the buyout premium was already priced into the stock prior to Alphabet's offer. Oh, and real quick, beat this crazy market with us by clicking the first link in the description. Okay, for Mandiant, the transaction caps off a crazy year of transformation in which the company changed its name from FireEye and sold off its FireEye assets for $1.2 billion last June. By shedding the network, email, endpoint, and cloud security products, Mandiant freed itself to focus on cyber incident response and cybersecurity testing through its Advantage platform. The company had stretched itself way too thin in a hyper-competitive market, leading to earnings that were subpar single-digit revenue growth throughout most of its recent history, which wasn't very good. As a streamlined company, Mandiant became a more attractive acquisition target, especially in this current geopolitical climate in which cyber attacks and threats continue to intensify. At nearly 10 times estimated fiscal year 22 revenue, the price that Alphabet is paying is somewhat steep for an unprofitable company. But the addition of Mandiant looks like a good fit for a few key reasons. At closing, Mandiant will merge into Google Cloud, significantly bolstering Alphabet's cybersecurity capabilities. Then, Google Cloud should be able to compete more effectively against Microsoft and Amazon, potentially creating opportunities to gain market share. While Google Cloud has grown pretty quick, Q4 revenue jumped by 45% to $5.5 billion. Alphabet struggled to make much headway against its rivals. Microsoft and Amazon still retain sizable double-digit leads over Alphabet in terms of cloud market share. Expanding its cloud business will help diversify its revenue stream away from advertising. The e-commerce push resulting from the pandemic, followed by the reopening of economies, fueled strong demand for digital advertising. However, if the global economy turns south, the tables would turn on Alphabet due to its heavy dependence on advertising revenue. And that revenue is about 80% of Alphabet's total revenue. A more balanced mix between advertising and cloud would remove some volatility in Alphabet's results. Now, other leading cybersecurity stocks such as CrowdStrike, SentinelOne, and Palo Alto Networks are also trading lower following the acquisition news. Part of the weakness is attributed to ongoing selling pressure in tech and growth stocks, but these stocks may also be getting hit on expectations that Mandiant will become more competitive under Alphabet's wing, and of course with Alphabet's immense resources. It's also notable that Mandiant is trading about 5% below the $23 a share offer price, reflecting some doubt that the deal will ultimately close. Technology giants, including Alphabet, are facing intense scrutiny from regulators for anti-competitiveness. Although the $5.4 billion deal is a drop in the bucket to a $1.68 trillion company like Alphabet, regulators may give this deal a closer than expected look. Assuming this acquisition gets done, I believe it will give Alphabet's platform an important edge as cybersecurity threats continue to rise around the world. Well, that's what I think about Alphabet's bid to take over Mandiant. But what do you think about this whole deal and the opportunity that it brings Alphabet? Let me know in the comments below, as your comments really do make these videos so much better. Smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. Thank you so very much for watching, and I'll see you in the next video.